Okay, let's dive into this. Sony just dropped its latest quarterly results, and while the numbers themselves are solid, the real story, the one that's actually reshaping the entire company, is this huge strategic split that's been in the works for years. So what's the big deal? Well, this is probably the biggest news to come out of Sony in a long, long time. After decades of being the sprawling giant with a really powerful financial arm, the company is finally in the last stages of spinning off its massive insurance and banking business. It's a fundamental shift in what Sony even is. So the official term you'll hear is a partial spin-off. But honestly, think of it this way. Sony was like this giant cargo ship, right? Carrying everything, including this huge, heavy container for its financial business. By dropping that container off, the ship is now lighter, it's more agile, and it's totally free to focus on its main cargo, creativity and technology. So from here on out, we're really just analyzing this faster, more focused ship, the core businesses of gaming, music, movies, and electronics.
All right, so with that big picture in mind, let's get down to brass tacks. Let's look at the Q1 report card and see how this new, more focused Sony actually did. How did the core business fare, all on its own?
Okay, first up, sales. The company pulled in 2.62 trillion yen. Now that's a solid 2.2% bump from the same time last year. It just goes to show there's steady demand for what Sony's selling, even without that financial business mixed in.
But here's where it gets really interesting. The profitability. We're talking a massive 36% jump in operating profit year over year. That's huge. It's a major signal that Sony's core businesses aren't just getting by on their own. They're incredibly powerful profit engines.
And, that powerful performance on the operations side, it flows right down to the bottom line. A super healthy net profit of 259 billion yen for the quarter. So the big question is, right, where did all this strength really come from? Which parts of this new Sony are doing the heavy lifting?
All right, let's pop the hood and look at the engine room. We're going to break this down by division to see who's firing on all cylinders and, maybe who's facing a bit of a headwind.
And this chart, wow, it just tells the whole story, doesn't it? The PlayStation and gaming division was the absolute hero here. I mean, look at that. An extra 82.7 billion yen in profit compared to last year. Just staggering. They got some great support from their imaging and sensing division. That's their camera sensor business, which also saw a nice little profit boost. On the flip side, the electronics division had a few challenges, and their profit dipped a bit.
And if we drill down into the raw numbers, you get even more clarity. You can just see how dominant gaming and network services is. It's not just the biggest in sales, it's also the most profitable, and by a long shot. This was all thanks to really strong software sales and more people playing, with active PlayStation users up a healthy 6% from last year.
Okay, so this strong first quarter, it's not just a flash in the pan. It's actually given Sony a real confidence boost for how the rest of the year is going to play out.
So, they've officially bumped up their full-year operating profit forecast. They were thinking 1.28 trillion yen back in May, but now they're calling for 1.33 trillion. That's a 50 billion yen upgrade. That's them basically saying, yeah, we think this new focus strategy is working.
So you might be asking, why so confident all of a sudden? Well, it's a few things working together. First, they're expecting that incredible momentum in gaming to just keep rolling. They also took another look at the potential hit from US tariffs and realized, hey, it's not going to be as bad as we feared, to the tune of 30 billion yen less. And on top of all that, you've got friendly currency exchange rates and just really strong demand for their image sensors in all our phones. All right, let's zoom back out to the big picture, to the spin-off itself, and talk about how they're going to wrap this whole thing up. Because there's a fascinating and, maybe a little complicated accounting twist to all of this.
Okay, so here's where we get into a little accounting magic, I guess you could call it. When they officially separate the financial business, a huge accounting item has to be moved around on the books. Now, on paper, this is going to create what looks like a ginormous one-time loss. We're talking up to 1.4 trillion yen. But, and this is so important to get, it's just a paper loss. It's a bookkeeping entry. It has zero effect on Sony's actual cash or the real profits of the business. It's just an accounting echo of the split, that's all.
And believe it or not, this is all happening really, really fast. The financial arm has already applied for its own spot on the stock market. Sony's board is going to give the final thumbs up in early September. And then the big day is scheduled for September 29th. That's when Sony Financial Group is set to start trading as its own separate independent company.
So as Sony puts the finishing touches on this historic transformation, shedding its financial wing to become this pure-play entertainment and tech powerhouse, it really leaves us with one massive question. Now that they're leaner and laser-focused on creativity and technology, what is Sony's next big play?